Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. markets. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date. First things first, I just wanted to mention that we do have a stock chart special going on right now for a limited time only this month, and I think it's literally right here, we're already at the end of it, is a special that we've got for 2 free months of stock chart service when you sign up or renew with a 12-month subscription. And if you're an existing member and still have months left, it'll just get added on to yours. So you don't have to be right at your expiry in order to do that. The second thing about that is Chip Anderson will be talking about our advanced charting platform this afternoon on Market Watchers Live with Tom Boley and Aaron. So jump in and check that out. That should be really interesting stuff. So lots of exciting things going on here today. I want to cover off this bull market that's uphill all the way. It gets a little harder when these tariffs are going on and we're starting to see black clouds on the horizon. So we've got some hopium becoming slippium, and we've got some charts that are staggering, I think, around the whole situation. I went through breadth the other day, so I don't want to cover breadth again today. The charts just got a little bit worse, so that's not kind of the direction we want them to go. But I do want to take some time and just show you a PMI chart that I found on my Twitter feed from Schwab and FactSet, and I think JP Morgan's name is on this too. There's lots of people into it, but it's a stunning chart, and to find the markets at all-time highs when we compare that back and look at how they behaved before. And again, European markets rallied this morning on the news that the tariffs went in place. So I have no idea why that happened. So sometimes it just really, when you're trying to figure out which way the market wants to go, and then you get a wrench like this. Like in Asia, I understood because they said the Chinese government was getting involved in holding up the market during this negotiation period. Okay, that I could get. In Germany, I can't get why they were up this morning on the news that the tariffs were going in and it might affect global trade. And as I talked this morning, we're seeing the stock market down again. We continue to make lower highs in momentum on a call it a 1 hour chart, but basically for the last 2 weeks, we've been making lower highs on momentum. So that's a bit of an issue. We're going to cover that off. And then obviously today is Uber's IPO day. So we're going to get into IPOs and just talk a lot about it because there were tons of them that were launched this week. And so I want to get into we're going to go through a whole bunch of them, but I think this week there was 13 IPOs, which I went back all the way to the beginning of the year, so 4 months and a bit, and we'd have weeks that didn't have any. So to have 13 IPOs this week is really stunning. In terms of total dollars, I think they said they had 35 billion so far this year and 40 billion last year. So that was a bit of a surprise, just that we're so far forward on that. The one chart that I wanted to mention, and I'm just going to go grab it now so I do not forget because I can get rolling, is this chart for Global Purchasing Managers Index. And what we found in 2001 and in 2009 is, the Purchasing Managers Index was getting worse and worse and worse. And then obviously we made the stock market bottom. The interesting part is here we are with the stock market top, and we've already had 12 months of declining Purchasing Managers Index. So I have no idea how the correlation would work with global PMI dropping this much, with European central banks still doing quantitative easing, Japanese central banks still doing quantitative easing, China's doing 80 different rounds of stimulus to try and get their stuff going, and this PMI number just keeps dropping. So I don't know if it's just the effect of the trade tariffs and whatever, and that kind of stuff going on. But to me, this is a stunning chart. That this would be when the S&P was at 666 or 667, and here we are sitting way down here with 12 months in a row of falling PMIs, and yet the stock market still goes to all-time highs. So it's a dichotomy I haven't got figured out, but I wanted to bring it to your attention because it when somebody says, well, everything seems so good, we should be able to to easily get past all of this trade tension. And I would just say, it's very difficult to sort the wheat from the chaff, and we're right at that point where I think it's an important time to do that. So first of all, here's the S&P 500. Maybe let's just update this chart. Yeah, so this is a chart I just keep, and it's basically year to date, but let's just slide this out and go back to beginning of 2018. What you see here is, we had this big uptrend from April going into the September timeframe, and then the big pullback, and we barely got above it. And now we're kind of not only through the January highs and the September highs, we're falling below all of that. And so I show you that PMI chart to say, really that chart started to fall when tariffs were first started to mention. So we see that stuff coming up, and most people don't kind of correlate it. But if global purchasing managers indexes are dropping, that's got to slow down trade. And if the S&P 500, if most of its business is in global trade, and all of a sudden you're trying to slow that down, or you're changing the relationships, I think that really could have a bigger effect on it. So I think those charts are worth watching, and the fact that we're not holding our breakouts here, as we go through the next few charts, I just want to show you that typically where the market breaks down is when your momentum goes negative, and so I want to show you how that looks on the charts. So here's the S&P 500, and I wanted to explain this purple shaded area here on the chart. When you're comparing any stock to the S&P 500, it will either outperform or underperform. So it will either slope up or slope down. Well, here, just to show you what this ratio does, is if you compared the S&P to the S&P, it just draws a flat line, which makes sense. But some people have trouble understanding what's going on. And so on the next chart, we're going to have a different market, and I'll just show you how that behaves. So looking at, let's say, the Toronto Stock Exchange compared, now all of a sudden you see at times the Toronto Stock Exchange dramatically underperforms the S&P 500, and at other times it slightly outperforms. So that's what that purple shaded area is trying to tell us. And hopefully that makes that a little bit clearer. So this is the Canadian market. Normally the Canadian market gets weaker before the US market gets weaker. Just in the last three examples here. So here is the late January, and the daily PPO, and it's funny, I say the show is about weekly charts, but today I'm going to go through daily because we're doing a lot of IPOs and we're doing a lot of testing of prior highs here. So just need to zoom in a little bit. So here's late January, and you can see this fall below zero. Here is late August, and you can see this fall below zero. So the Canadian market topped a month before the U.S. market, and we'll notice when the U.S. market went below zero. Anyway, you can see that the Canadian market today is starting to droop below zero. So this is not a really good place, and we've lost the 50-day moving average. So that's a bit of a problem. Okay, let's go look at the S&P on this same sort of chart display, and notice the PPO is sitting right down here near zero, and here it is in February, kind of mid-February, dropping below, and then it dropped below again in March where it rolled over, and then we have the big drop in October. So we're sitting just barely above here, and this is getting pretty important, and we're losing support of the 50-day on the S&P as well. Okay, so here's the Russell. And what we see on the Russell, and again, here's the January where we went below zero. We briefly dipped below zero here. So just momentum in general is a good thing to keep an eye on. But, here we have a slightly higher high. Here we have a lot less momentum coming into this. And now that the week has turned out to be a little rougher than most of us thought, momentum is really kind of thrusting downward here. So there's a little bit of space left, but not a whole bunch, actually. And we'll find out where that finishes on the end of the day. The S&P has now made new lows for the week. So this is adding speed here. So here's the New York Composite, so the group of all of the stocks listed on the New York Stock Exchange. And you can just see the previous high from September was up here at 1326, but we had a bigger friction level for this one at around 13,000. We are now below the 50-day moving average, moving down to 12.6, and momentum has gone below zero Same thing that we saw in a couple of other cases. So it's this big downward slope here that I'm a little bit worried about, that, on this latest high, we were declining rapidly anyway. Now it just seems to be picking up speed to the downside. Okay, Nasdaq 100, and again on this one, I like to keep track of this relative strength. So how is the Nasdaq doing compared to the S&P 500? And when the Nasdaq outperforms, it's usually a pretty good place to be involved with the market, and when the Nasdaq underperforms, it's a bit of an issue. So there's a really long trend that we can draw under all of this. And it went up and kind of broke in around here. And then as that broke down, that's a big deal. Well, right now we've got a multi-month trend that is just breaking. Still not that bad, but you can see we're giving up the 50-day moving average all the way through that June, July, August, September rally. We managed to hold that 50-day, and now that's starting to leak out. So we probably need a little bit more good news to show up pretty quick in order to save this chart with a Friday close. PPO again up at a very high level and now dropping very quickly. So that's another concern. Here's the Dow Jones Industrial Average. What we see on this one, so again, 30 big mega stocks. We're well below the 50-day moving average on these big names. And, Apple and Microsoft are in there, two of the bigger names in the world. And they're both, this is all getting pulled down here. We've gone negative on that index. And so it's not just small caps or whatever. The small caps actually have a better PPO. It's still above zero than these large caps. So that's really starting to worry. And you can see that, people had moved into the large caps and it was keeping up with the S&P 500. And since March, the large caps have underperformed the S&P quite a bit, or the Dow Jones Industrial 30 have underperformed the S&P 500. And really what I think that's saying is tech is still holding everything up, but these other companies, there's Walgreens in there and Walmart in there and quite a few other names, Visa. What we've got here is that in general, these large caps aren't able to hold up, and usually that's not that bullish. So a bit of a problem there. Okay, one more, the Nasdaq Composite. And what I want to show here is just these two big trend lines where the Nasdaq Composite, so the other was the Nasdaq 100, and this is just starting to break here, and that's not that good when we see that trend break. So we want to watch that very, very closely, and the momentum's almost at zero. So unless we get a nice late Friday save here, these charts look very weak going into the weekend. Okay, back on here, I got three more charts I just want to share. So this is the monthly performance for the S&P 500, and as we can see, we were at the beginning of the week, we were up 2% on the week. Now we're down 2% on the month, up 2% on the month, and now we were down. And then let's just go back one more. And these are the Fed meetings. I showed this one a couple of times already, but here we are in the January top, the September top, and now this one. So these Fed meetings do matter, and it's important to just be aware that there's potential for trend change on these Fed meetings. Doesn't always happen, but pretty close to marking the lows, pretty close to marking the highs. And I think as these roll around, you kind of want to be aware of them. So anyway, big pullback so far off the Fed meeting, which was our high of the market so far. So that's good on that front. The other thing I would say is we're starting to accumulate distribution days, which is more high volume days on a down day. And so when you start to get lots of red bars grouped together, that's usually not that bullish, and we're kind of in that situation now. Okay. So the second thing I mentioned was that these commodities are sitting on their moving averages. And so here's West Texas, and the point I would just say here is we're right on the 50-day moving average. Here's copper. Right on the 200. Here's copper sitting on the 200-day moving average. If we go to Brent, this is world oil sitting right on the 200-day. And if we go to dollar gold, a little above the 200-day, but again, all of these are just kind of hovering above long-term levels. And as these markets start to break down here, I think, if global demand kind of slows, then all of these commodities are going to be under pressure. So I think that's really what we need to watch for and pay attention to. Gold's trying to make 2-week highs today. Oil is down near the lower end of its range again. But just to, I want to highlight one fact. So Canada had the largest jobs growth last month ever. It had 110,000 jobs. So very exciting. And the market is down today, roughly 150 or something for the Canadian market. On 15,000, so roughly 1%. And so that's why it's important not to trade the news and to follow the charts and what's going on behind the scenes. I think we've got a lot better data than trying to trade those. This is the Commodity Research Bureau so far, and the point I just want to make here is the commodities this week are having some pretty ugly days, and marijuana looks like it's not holding up either, and lately that's been one of the growth areas that's really been popping. So just big caution out there. If this global trade thing is going to unwind a bit, I think this commodity sector is going to have some jolts within it. Okay, so I just put a whole bunch of these IPOs together in a chart list, and the reason I want to show you is many people don't take the time to just kind of walk through and say how do IPOs trade, so we're going to do that for a little bit here. And this is one that's gone on for a couple of months now. You can see opened up, dropped for 2 days, ran for 10, fell. And it takes a while for a stock to kind of build a base. So I think at this point, we would probably say 20 bucks is a reasonable number for the stock. That's kind of where they priced it, actually. But it's oscillated above and below that level. And you're better off for these IPOs to let them kind of blow up, come down, and build some sort of a base, be it a 4-day base or a 10-day base, and try to buy some sort of a rollover on them if you really feel like you got to enter an IPO. This one I'm interested in. We recorded it as going into the system, but it's not there. It's a Light Technologies. Here's Aciano Therapeutics, and you can see we priced this one, or it was priced at up around 11.50, and it's just been declining every day. So this thing's already in half. So even if you were excited, that doesn't feel that good. And here's Avedro, and this one's basically been jogging sideways. Now, this is what's nice. You've got to call it a level $13.75 or $14, and this thing, even in the face of today's gloomy trade news, is popping to the upside. So that's one that, somebody's willing to put a bid on. This one just came out in the last couple of days, and it's going straight down. It was priced way up here and then fell. Here's Beyond Meat, the crazy one. So $25 to $85 and now rolling over. Go look at how Shake Shack opened or Facebook opened or any of those. They usually come a long way down, and then when that base is finally built, then you can start to look at them. Tilray's another one to look at. Here's Crescent Acquisition. This thing basically just gone sideways. No real data flow there. Here's Cordyzyme, a biopharmaceutical, I think. And then Diamond Peak Holdings, just, not enough trading volume to really make us get interested. Looking through Precision Biosciences, this just came down, and now you can start to see how a base might be forming here, call it 1350 or whatever. And if you just keep track of the IPOs as they come out, you can, let them mature, or at least give you some data history about where they're going to trade. Something like that Beyond Meat, I think you just have to take the trade off the table until you get that base and pull back. And then if it's going on to be a wonderful thing, it'll start to get bid up again. So here we have Futu Holdings, and again, same idea, right? It IPO'd way down here, shot all the way up. So this thing was at $12, went to 20, and comes all the way back down, and it's almost back to where it started. And if anything, maybe starting to build a base. At least the bars are volatility is starting to get smaller. This one's really choppy trading, not enough volume, and you can just see that some days it doesn't trade at all. GenFit started off big surge from 20 all the way up to 26 and rolls back over Green Lane. And again, I'm just going back to the beginning of the year, and I've also put in Spotify just to show you how that one, because it came out with a lot of fanfare as well. Gossamer Bio, and again, IPOs takes off, big bullish news, falls back, maybe tries to build a base here, ran up again 2 really good days, and then all of a sudden just drifts right down. So still volatile trading, and if you get a base of a couple of months, at least it's going to give you something to work with. Harpoon Technologies or Therapeutics here, you can just see it rolling over, maybe starts to make a higher low, and this is a base that you could start to buy off of. This acquisition's gently sloping higher. Headhunter, this one opened yesterday and pushing up nicely, right? IPO's at $13.50. It's up at $16 already. So don't know what they do. This one's just trading sideways, crazy price action. Looking in on Hoth Therapeutics, same idea, right? These IPOs shoot all the way up and pull back. So what I'm trying to point out on these, just as we go through, is that a lot of them will get that urgent gap higher, and the actual reality is that you can probably get a much better entry just by missing the main IPO and letting them pull back for a couple of months and give you a chance to get in once the hype is gone. And as Uber starts to trade today, it'll probably be a while, midday or something. Anyway, when it finally starts to trade, I think you'll find it, it gets the big surge. But the real question will be what happens to it, 90 days out or something. So anyway, here's IMAC Holdings. This thing gaps down, comes back up, tries to rally, and has just gently started to change. And you can see how the volatility is really wide on these bars, and now it's settling down into trade in a normal sort of trading pattern. JFIN Group, just busting out here in a big way. 8i acquisitions, not enough trading volume. Here's Juma Technology, same idea. Soars up, sounds really good, $18 to $49 or $50, and goes all the way back down and comes back to 18. And obviously some good technology behind the company, but a little too much hype on the first day. Kaleido Bioscope, nice. This is just grinding sideways, kind of building a base under this $15 level. Starts to move through it. Maybe that's a much better entry. Levi hasn't done anything. The blue jeans just keep hanging on here. And if anything, I would just say there's a little bit of a kind of 3 surges here. And the last surge with not much energy, this might have to go a little lower to find some buyers. Here's Lyft. And again, the offset of Uber. It was the first transportation company to come on, and of the app companies to come on, and pulled all the way down. A base building here under $62, and maybe if it starts to break above that, you start to turn higher. Maryville, you can just see trading in a very sloppy wide range so far. And here's Milestone Pharmaceuticals, huge surge, and then comes all the way back. Brigham, same idea. So I hope by just kind of working through a bunch of charts, and I had an easy way to pull up this list, so it made it a little better for me. But it's when you see these charts and everybody wants to get in on the surge, you do not want to be buying at the top of these high bars because it's going up infinitely. You want to find them much better when they've started to calm down in their trading and get normal, and then you can start to look for better entries where you can measure your risk. Here's NextGear, $15 to $22, so a 50% gainer, and then pulls back the next day. PowerBridge, same idea. So as all of these surge and you just want to work through them, here's PagerDuty, 24, gaps up to 40, 35, and keeps going. It's at 50. This will round over and give you some sort of a base pretty soon, probably. And when you get that base, you're much better entry. This is a good example, Pinterest. So lots of volume on this one, 80 million shares here. With that kind of volume, we can finally get some measurement tools. But here we go, running all the way up, right? 19 to 35, just about a double, ends up pulling back, and now you're at $28. Now let's just let it build a base, go sideways, and see what it can do from there. Parsons, same idea. These big surges you see, and then the pullback. And as we work our way out here, here's Rune Holdings, and that looks like what it would do for your portfolio if you jump on these things. IPO'd at 12, it's down at 550 already. SciPlay, big wide swinging range. Silk Road Medical just gaps up and is holding nicely. I think you still have to wait for this to just create a base, and then better entries will show up for you. Some technologies, wide ranging. And again, these first days, the scale goes, this first bar will always go the full height of the scale. And the reason is because the computer will automatically say, what's the range within the time period? So from here to here. And this was the biggest range from this top to here. So it will always stretch that bar out to look like it fills the chart. So here we go, Spotify. And again, this one traded back a few months ago. And let's just click on that chart and go look and see how this traded. I'll just add a year to it. And the idea being, here it goes, it rocks up and it gets up to $196, right? And falls all the way down to 103, so a 50% haircut. And now it's starting to base in here or build some sort of a price action below the 200-day moving average and grinding sideways. So maybe a break above 150 would make it more attractive to own. Okay, Shockwave Media, this one had built a nice base and is now starting to climb out of it. Don't know what they do. Maybe they're an advertising firm or something. So Young International, just dropping sideways. But again, the point I want to make is here's another excellent example where it's trying to build a base and it ends up building a top, and now it needs to go lower to find new buyers. Fintech, lots of talk about Fintech, and this thing looks like it's going to the moon. $8 to 23. It's a double. And then comes all the way back to $8. Now, maybe they got great technology, but you don't need to own it until the chart price action starts to work for you. Toughen Software Technologies, same idea, rolling over. TradeWeb Markets, grinding sideways. So this is looking much better. And if you don't get your breakout, you probably don't want to own it. And here's the Uber, and it's funny how it comes up with new favorite and. So far, no trading action on it. And when it finally does open, we'll keep track of that. Youngji, this one, same idea. You just see these big pops and then pullbacks. But I think more importantly, and Zoom Video, this is interesting. Opened at 36, trading all the way up to 80, and now grinding sideways. And I still think you want something like this to make its base and then give you an opportunity to get into it. I do want to just go back to the overall markets right now because they're pulling back a little bit harder again today. And just for everybody, that you can just click on any one of these headers, or you can click on these rows down here and just go in and look at the markets. But we're going to click on the S&P 500 and go in and look. And it's just this constant moving down, and you can see the momentum is just sliding on these charts. This is a 1-hour chart, but we're taking out yesterday's lows again. And the chart keeps working down here. 200-day moving average will probably be pretty important, and we'd like to see that hold. As we get onto the weekly chart here, again, if your momentum is going to roll over here, this is a pretty important place on all of the charts for us to be aware of. From a point and figure perspective, we've now pulled back, and we won't make a sell signal until we get way down here at the 2730 level, actually 2703. So that would be where we'd actually bottom out. So thank you for taking the time to join me on Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern and 7:30 Pacific time on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or on Stock Charts TV, which has a running list of technical charting informational shows. And remember, we got the special going on, and we got Chip on the air. Thanks. Bye-bye.